right, welcome to the India Development Debate right here on ET Now. I'm Supriya Shrinate and straight on to a big discussion this evening. When in doubt, leave it to an expert panel. The time-tested Indian panacea has come in handy to reduce tension between RBI and the government. After a marathon RBI board meeting, which lasted over 9 long hours, the central bank blinked, agreeing to form an expert committee to look at the contention issue of transfer of surplus reserve to the central kitty. Remember, ET Now had exclusively reported the RBI's proposal to form a panel to look into the capital framework. In a late evening release, RBI said banks can restructure loans worth up to 25 crore rupees to MSMEs to address the liquidity crunch in the banking system. Experts and former RBI officials say it is good news that the communication channel at least is now open between the regulator and the government. The key takeaways and what it means for India's economy is a top story right here on the India Development Debate. And joining us to take this story forward will be an expert panel. But before I go to any of them, I've been joined by a very, very special guest right here. Okay, we'll just get that guest going. But I think joining us right here is Mr. R. Gopalan, former Secretary, Department of Economic Affairs, former Finance Secretary. Also, V. Anant Nageshwaran, the Dean of IFMR Business School, Kriya University, T.T. Ram Mohan, Professor IIM Ahmedabad, Swaminathan Iyer, our consulting editor at ET Now, and of course Maithili Bhusnurmat as well, our consulting editor. So very quickly, before I go across to anybody, I would like to quickly talk to Maithili about what could have been a very disastrous day as far as the RBI is concerned, a day that perhaps began with speculation of a spate of resignations and how bad it could have been between the central bank on one hand and the others. Maithili, what's your take? Very quickly, if you can go ahead.
Yeah, well, the biggest takeaway is really that the two sides talked and it seemed to have ended in a fairly amicable fashion. So I think that really is the biggest takeaway. Apart from that, the setting up of the committees, etc., these are very minor, progress really, as roadmarks as it were. But the biggest thing really is that the two sides agreed to continue talking, and that, to my mind, is the biggest takeaway. At least a step back from the brink, and let's see how it goes going forward.
Okay, Maithili, hold your thought there, because I've got a very special guest joining us right here on the India Development Debate, and India's former Finance Minister, Mr. Chidambaram, joins us right here. Thank you very much, Mr. Chidambaram, for being with us. You called today a day of reckoning. You called today a day that could possibly have seen the resignation of India's RBI governor, perhaps his deputy. That was the speculation, that was the big fear when this high-stake meeting began. Are you heaving a sigh of relief, before I ask you any other thing, that at least that has been averted? That big calamity has been averted?
From what I gather and from what I gleaned from the official press release, it appears that government has stepped back and the government has also been conciliatory on issues of concern to the government. And I think that's good. To some extent, I think the voices that were raised over the last few weeks, especially the former governors, the former directors on the board like Mr. Maligam, those wise voices seem to have had some influence in the government. And I'm therefore happy that the government has stepped back.
Okay, so you are at least happy that the government has stepped back. But sir, if I may get into the substantive parts of the RBI press release, and it very categorically says that the big issue, and you believe that everything else is a smokescreen, the big bone of contention really was the reserves, really was the surplus capital. And in some sense, the board has decided to constitute an expert committee to examine the economic capital framework, the membership and terms of reference of which will be jointly determined by the government on one hand and the RBI on the other. How do you review this? Do you believe this is a welcome exercise? At least the two stakeholders will be able to sit across the table and talk on this issue instead of, a bitter battle of words playing out in full public domain. Surplus is an important issue. There needs to be more predictability and more objective way to deal with it.
The surplus is a technical issue. It's not something which everyone can understand, and it's not something which can be discussed and resolved at a board meeting where the participants are from different walks of life and not necessarily domain experts. It's a highly technical issue. It must be examined by technically qualified people, by people with great experience of central banking and the role of a central bank. Therefore, I think it's a welcome decision to appoint a committee. Such committees have been appointed before. To my recollection, there were at least 2 committees before, and they recommended different proportions to the assets of the RBI. So another committee to examine the surplus as a proportion to or the reserves as a proportion to the assets of RBI is welcome. I was not happy that the statement said the terms of reference on the composition will be jointly decided. And that was not a very happy phraseology. They should have said a committee will examine and left it there. I think the government wanted to make the point that it will jointly decide the composition and the terms of reference. If that is a issue of the ego, so be it. But I think those words could have been avoided.
Fair point indeed. And I think there are plenty of references to the board even in this release. If I may draw your attention to an important point, and one of those points is that the board, while deciding to retain the CRAR at 9%, has actually just extended the capital conservation buffer by 1 year. Do you believe on that count the RBI has had its way, because the government wanted that 9% to be reduced by 8%, and there were plenty of voices within the government that kept saying that how India is even more stringent than Basel norms, and for a growing economy and a developing economy like ours, we perhaps need a little bit of a relaxation there. Do you believe there could have been more give and take, or do you believe the RBI has done the right thing by retaining it at 9% and extending the capital conservation buffer by a year, which is the end of March 2020?
That was purely a function of the RBI, more specifically a decision to be taken by the governor. Whether the last tranche should be extended by 1 year or not is a matter for the governor to decide. The board would have tried to persuade the governor to extend it by a year. The governor could have agreed. There was no reason to say that the board agreed to extend the last tranche of the buffer. It's no part of the board's business to extend or curtail the buffer. It's no part of the board's business to say what the CRAR shall be. It's no part of the board's business to fix a time limit. It's entirely an RBI function, and I'm slightly disappointed that the governor gave in on that sentence. He should have said, the sentence should have read, the board requested the governor to consider whether the last tranche of the CRAR could be extended by 1 year.
No, fair point, and which is why I say the references to the board are numerous and one can keep counting them, because there's yet another reference. And 2 quick last questions before I let you go, sir. And one of them is that the PCA norms with regard to banks under PCA, and there was this big noise about those being relaxed. As far as that matter is concerned, the RBI press
I'm sorry, you are not listening to me. I'm sorry, you're not listening to me. I can't hear you.
Sure, go ahead, sir.
The other reference to the board is correct. The other reference to the board is correct because that is only advisory.
But as former finance minister, do you believe these were issues that required such a bitter standoff between the government and the RBI? I mean, most of these issues could have been resolved. It has, after all, gone down to one committee in one instance. It's gone down to an advisory panel in one. I mean, why did there have to be such a bitter standoff to the extent that one was mulling over, is the governor going to resign? Will his deputy be asked to step down? I mean, in some sense, there's been a lack of maturity on both sides.
I don't know about the RBI side, but I certainly know there is lack of maturity on the part of the government side. I think government's motives to start with were not honest or transparent. If they have become less dishonest now, if they have become more accommodative now, I welcome that. But I think the government's motives, as recently as a few days ago, were not honest and were not transparent. I don't think these issues should have been escalated to this level. A 9-hour board meeting. I think these matters could have been resolved by the finance minister and the governor having lunch together and spending just an hour or even less. The conclusions arrived at today's RBI board meeting could have been arrived at with far less bitterness at a lunch meeting between the governor and the finance minister lasting no more than an hour.
Fair point. A quick question, sir, and I'll let you go after this, Mr. Chidambaram, and that question has to do with the reason why a lot of people were losing sleep over surplus transfer or reserve transfer was because the demand for that was stemming from fiscal concerns in New Delhi. There is a weak fisc, and which is why people were worried, is this money in a pre-election year? What is this going to do? Is this going to lead to some kind of a euphoria that the government will do in a pre-election year? Is this going to stoke inflation further? In some sense, as somebody who keeps an eye on India's fiscal space, are you heaving a sigh of relief that at least that money is not coming to RBI in any rush? Sorry, through the government in any rush?
Of course, even if that money was coming, I'm not sure that money should be used to bridge the hole or fill the hole in the fisc. There are other uses for that money, if at all that money should come to the government. I'm happy that the government has been told in no uncertain terms, you deal with the problem of the fiscal deficit. Why did the government give up 70,000 crore of borrowing and boasted about it? There was no reason to give up 70,000 crore of borrowing in the second half of the financial year. Be that as it may, I'm happy that the reserves are not being touched to fill the possible hole in the fiscal deficit.
All right. On that note, as somebody who keeps a close eye on India's economic and fiscal position, it's always good to chat with you, sir. Thank you very much for spending time and speaking to us this evening on what is thanks very much, sir, on what is a big and a crucial RBI board meeting, one that has taken a few calls, but on the face of it, it looks like the RBI has been able to hold its ground without having being made to cede too much space. Let me go across to my panel that's joining me right here. I've already introduced them. And Maithili, we started off with you. Let me go across to Professor T.T. Ram Mohan. And Professor, are you someone who believes that the RBI has been able to hold its ground? The government hasn't been able to push the RBI into a corner? And my quick note of apology to each one of you, you had to wait. We just got that last minute interaction with Mr. Chidambaram and didn't want to let go of him. Go ahead, Professor Ram Mohan.
Well, I think the RBI has held its ground on some matters. It has also conceded ground on several matters. So I think it'd be fair to characterize the outcome as a fair bit of give and take on both the sides. And I think one of the most important outcomes, which you sort of referred to in your conversation with Mr. Chidambaram, is the repeated references to the board. And it seems to me that implicitly, the role and powers of the board have come to be acknowledged in a way that was not there earlier. So I think this is a very significant development, which is that at least the principle that the board has the right to discuss many of these issues and express its views, that principle seems to have been conceded to a very large extent. Now, whether the board can issue directions to the RBI governor is a gray area. It's a legal matter. We don't know exactly what the position is. But I think nobody can deny that a board which has been vested with significant powers certainly has a right to ask that policy matters be brought up to it for discussion. And looking at the various issues that have been discussed, the sort of outcomes that have emerged, it seems that that point has been very substantially conceded.
No, I kind of of agree with you completely on that. The numerous references to the board, and in fact, the first chat that I had with a lot of people on this was the numerous references to the board. Never before in the RBI press release, I think if my count was right, 6 times has the board on every decision been referred to. But Swami, is that how you read it as well? That while there was a lot of noise about RBI being a board-run institution before this meeting began, implicitly that perhaps has been done. Implicitly, perhaps that has been achieved with the various references to the board on almost all decisions taken.
Supriya, I mean, I think this has been a storm in a teacup, blown out of proportion. In fact, I think the headline, one column was viral storm in a teacup or viral storm in a teacup. At the end of it all, there have been discussions between the RBI and the government before on big one-time transfers of reserves. I remember there was one big transfer, about 65,000 crores that happened some years ago. There is nothing unprecedented about the government asking the RBI to transfer, and they would have to have some discussion on what is the exact definition. Now, this thing got sparked off because Viral Acharya gave a particular speech. It was a passionate speech full of a large number of examples, focusing especially on the example of Argentina, where when the government made a large demand for reserves, the central bank governor said no and he resigned. And one of the consequences, said Viral Acharya, was, there was a huge fall in the value of their currency and their bond rates went up and there was chaos in the market. Now, because of this, this thing got blown up in India as being a very big issue. It is not such a big issue. There have been discussions between the two on reserves before. As far as the Argentinian example is concerned, in Argentina, the central bank governor resigned. There was absolutely no reason here for anybody to resign because, it really was a storm in a teacup. Viral Acharya put forward a particular point of view, which he had every right to. The government has a right to, however, press saying that, in our view, we do need reserves or we need greater clarity. It shouldn't just be up to the RBI. So I think it is appropriate that the two institutions talk to each other. They have set up a particular committee. It's a technical committee because the issue itself is pretty technical. Now, while the issue is technical, the fact is that it is an election year. Because this is an election year, politics has come in a big way. You have a situation where there are problems on the revenue front. The government does not want to go on an austerity drive in an election year. It wants to keep spending. And because of that, it's looking for ways to make the fiscal situation easier. And it has asked for this additional sum of money. Whether that sum of money comes or not, I do not think would make a critical difference to the budget itself or even the election outcome. But politics being what it is, I would say we started from the political imperative of trying to spend in an election year. That led to this government request, please send some more money. We had Viral Acharya's speech, in a sense, publicizing needs where the RBI should be independent and not ask for money. Now, independence is okay. You have been given independence by your own.
Swami, give me a minute.
I'm glad.
Swami, give me a minute. I think the point that you raise about fiscal spend is very important. Just give me a minute. I think the point that you raise about fiscal spend is very important. Let me take that point across to Anant Nageshwaran, who's joining us here. And Anant, the reason why a lot of people were worried and concerned and were raising their eyebrows on this request for reserve transfer, because the request was stemming from a weak fiscal position. Because people feared in an election year, the government could put this to populist measures, or the government may use this to plug the hole. As far as the fisc is concerned, we could be a lakh crore short on the GST revenue front. Divestment hasn't taken off. Are you somebody who's equally concerned on that count? And do you believe in some sense that calamity has been averted? The fact that this reserve money is not coming anywhere soon to the government will not be able to plug its holes through this. So 3.3%, whether it's doable or not doable with the RBI reserves.
No, I think the assumption was made by people that the request came by a government that wanted to spend its way to an election victory. But as you pointed out, there were other valid concerns. For example, the government still has to recapitalize the banks and money has to be found for it, etc. And therefore, one needs to delink the our own judgments about the election year imperative of the government from the fact that the revaluation reserves are on the high side at 27% of the FX reserves and gold holdings. And therefore, it is appropriate. Of course, the fact that the request was made in election year and the request was made in a very publicly aggressive fashion make it all the more, gives it all the more of an appearance of a government browbeating an institution, a political institution. So the optics were not good for the government. And therefore, this outcome where it is transferred to an expert committee for it to give its opinion is the right way to go. And that will also take away the charge of bias and expediency against the government.
Fair point indeed. And an expert committee, I'm presuming, will be full of experts jointly decided and determined by the Government of India and the RBI. Mr. R. Gopalan, who's had experience in budget making, who's perhaps spent many a sleepless nights in trying to bridge the fiscal deficit because he was there at a time when, you know, the big slowdown happened in 2008, 2009 and those years. Mr. Gopalan, the fact that reserves are not coming essentially to the RBI and perhaps a committee will decide on it makes me point in the direction that we are perhaps moving into a regime where there will be a more technical, more mechanical, more objective way to deal with reserves. And dealing with reserves isn't the first time we are doing this. This had happened in the past as well with the previous UPA government asking for more reserves, now this government. In some sense, is this perhaps the right call to make? Let an expert committee come back with recommendations and let the board take that call. And like Mr. Chidambaram said, would you have rather preferred this call to be made? You know, the reference to jointly determined and all of that is obviously an assertion of the government's authority and the board's authority as well.
Well, yes, this RBI in its knowledge, in its wisdom and its experience, it could have formed the committee itself. The fact that government is to be consulted raises some amount of difficult, questions in my mind. Probably who are the kind of people who are going to be appointed from the government side to this committee? I hope they will really appoint neutral, technically competent persons to this committee so that the odium of that government influencing this decision in one way is avoided. So that's something which I still have to keep my fingers crossed, and I won't be in a position to let you know until the names are out at this point in time. But good thing is that any browbeating of RBI by the government on this issue has abated, and I think that's the right way to go forward in a system where we have very few institutions in which people believe, and RBI is one such institution, and therefore we have saved the day for such institutional independence to come about.
No, absolutely. I think institutional independence in this high-starch political narrative extremely important. But let me go across and address the other issue, and I think reserves we've done. Let's talk about the other issue, and that is banks under PCA. And Maithri, to come to you with regard to that, it has been decided that the matter will be examined by the Board for Financial Supervision, which I'm believing is advisory in nature of the RBI. There are two quick questions there. This was a big demand from the government that the norms should be diluted because there is a lending requirement there. There have been other people on the channel who've come and said it is not just about credit availability, it is also about are there enough people to take that credit, and are we putting the cycle back into more NPA formation? What is your take on how this has been dealt with?
Well, again, I think the government and the RBI have bought time, but the best thing for the government in this situation would be to go ahead and recapitalize the banks, because that is purely recap bonds are purely a book entry, and the only cost on the fisc would be by way of interest on these recap bonds. So I think given the fact that the PCA norms have not been relaxed by the RBI for the moment, and it's only a committee that's going to look into it, the BFS committee going to look into it, the government should just go ahead and recapitalize the banks. That would be the smartest way of handling the situation without creating a fresh ground for any kind of confrontation between the RBI and the government. So let's hope that the government does do that, because unless the PCA norms are to some extent diluted in the not too distant future, it will become very difficult for banks to extend credit, and clearly the MSME sector is being squeezed for want of credit.
No, I couldn't agree with you more on some aspects, but just to be the devil's advocate and point out the other argument on this front, and Professor T.T. Ramohan, you know, dilution of PCA norms at this stage, the fact that the central bank has been blamed by the government of the day and a lot of other experts out there of having looked the other way when the present set of NPAs were mounting, are we actually doing that all over again by diluting PCA norms? There is a reason why these banks will have restricted lending. There is a reason why they have been put under the PCA. To consciously dilute those norms, are we taking too big a risk and not ring fencing our banks enough?
Well, let us understand what the so-called dilution, what is the dilution proposed and what would be the implications of that. You know, what the government is arguing is that internationally, the sole criterion for prompt corrective action framework is capital adequacy, whereas the RBI in its wisdom uses two other criteria, which is the ratio of non-performing assets and the return on assets. And they are saying that you don't have to have such stringent norms in India, and let's go by the international norm and bring banks into a PCA framework solely based on the capital adequacy criterion. Now, the concern would be that if you are attempting the so-called dilution and you cause higher credit flows to industry and particularly to SMEs, then again you run the risk of some of these weak banks running up higher NPAs. But as against that, the argument would be that if there is not enough lending to certain sectors such as the SMEs, then there are implications for stronger corporates and also for the healthier banks. So there are systemic implications either way. If you don't have a prompt corrective action framework, then you could make the weak banks weaker still. But if you have very stringent norms for PCA, then you could weaken banks which are healthy now, because when there is not enough flow of credit in the economy and the corporates and SMEs as a whole are affected, sooner or later it's bound to tell on the health of the system as a whole. So somewhere a balance has been struck, and hopefully the committee that is looking into it will strike that balance.
Swami, you agree with Professor T.T. Ramohan that this is about striking a balance, and it is a choice between making the weak banks weaker and responding to the needs of what is essentially a growing economy and parts of the economy that are cash crunched. But a lot of people out there believe that there is a reason why PCA norms are how they are. Even on the Basel requirements, there are parts of Basel requirements where India is more stringent, but there are parts where we are far more lenient. I will take up the question of the CRAR staying at 9%, but in principle, do you agree with a review of those PCA norms? Of course, it's going to be done by a supervisory body, and I'm presuming it's going to be advisory in nature, and the best minds of RBI board will then decide on this. But in principle, do you believe dilution is required, or is being cautious perhaps the right thing to do at uncertain times like these?
First, I would agree. It is time to take a second look. And the point that TT made is quite right, that, if there is one particular capital adequacy norm other people do, why are we being ultra strict? But I would go beyond that. I mean, having PCA banks is not a permanent solution. You can't just have banks that collect and just don't lend at all because they are regarded as permanently mismanaged. You should have been changing the management. You should say there was something about the managerial structure which was very, very wrong and led to some wild lending. Have you taken steps to change that managerial structure, bring in other kinds of managers, bring in other kinds of norms so that you can once again trust these banks to lend? You have to get them back at some point of time to become normal banks. That cannot be done just by saying, "Arey Baba, PCA banks don't allow them to lend." So I said we have to go beyond the question of dilution of norms to, do you have a proper overhaul of procedures and managerial systems so that these once again become normal banks? I think that is the really important question.
Okay. Anand, what's your view on the PCA? And I think let's just get into the technicalities of these. The board, while deciding to retain the CRAR at 9%, agreed to extend the transition period for implementing the last tranche of 0.625%. under the capital conservation buffer by 1 year, which is the 31st March 2020. There is a larger question on control that I'm going to take up with Mr. Gopalan. But with you, if I may ask this question, I mean, you know, both Swami and in fact, both Swami, Maithili and Professor Ramohan believe that the time has come to review because some banks can't be permanently weak and permanently in a position to take money and not lend. Are you somebody who believes this should happen, or are you someone who actually is apprehensive that this may lead to another round of NPAs getting created and we are perhaps going to preside over those?
Yeah, I would actually, I mean, between the two options, I would probably err on the side of someone who would want the prompt corrective action framework on some of these institutions to continue. Of course, RBI should lay down the conditions to the management, the owner, which is the Government of India, as to what are the situations and circumstances under which it would be happy to relax the PCA norms, provided the government as a owner does A, B, C, D and E. So I think without that, just relaxing the PCA norm to increase the flow of credit is, in my opinion, is to miss an opportunity to use the current NPA crisis to bring about some structural reforms. I completely note the very insightful point that Professor Ram Mohan made about if you extend this PCA norms and there is no credit growth, even the stronger banks over time can become weaker because you are not making them lend and grow because you are weakening the whole economy. So there is a trade-off here, and I appreciate that. But given the trade-off, I would prefer to err on the side of using the crisis to bring about a more structural change in the way the management and governance of these institutions are done, rather than relaxing them to address the short-term credit flow imperatives of the MSME sector or whoever else it is.
No, fair point indeed. I think I'm getting a lot of nuanced opinion on the show, which is exactly what we want. But Mr. Gopalan, there is a view out there that says that any lowering of guard of PCA will keep the credit delivery system suspect and mounting far more NPAs. You know, while the panel does here believe that it is time to review, of course, you know, there is also a nuanced view that these need to balance out. But do you believe this could end up NPAs in perpetuity, and this could raise suspicion on the credit delivery system?
Well, we need to, two things. Both Mr. T.T. Ram Mohan and Anant, I agree, the points are very eminently made, and when you do some relaxation, obviously you have to ask something from the government to do on their part. For instance, the capital, infusion to the banks and management structure change and those kind of things, board professionally managed, those kind of conditions which one would want for a PCA banks to really come back to health should have been put by the board. I hope government is supposed to make a statement tomorrow. I hope government will take that into consideration and indicate what it proposes to do with regard to the PCA banks. 2 points I want to make again. One is the CRAR 9% retention and the transition of the last tranche of 0.625 under capital conservation buffer by 1 year is applicable to all banks, not to PCA banks alone. This is in my view, I do not know why it has been done for all banks, because all other banks which are healthy, why you have to lower the guard as far as those banks are concerned is a question I am not able to clearly understand. As far as PCA banks are concerned, yes, they must have a discipline. They should not make the financial system more suspect, and that would feed back into other lending by other institutions to industries, and therefore we need to be very, very careful in handling the PCA banks, but the government should have been asked to take some steps to make this really doable. There is always a trade-off, and this should have been insisted upon.
Okay. No, I kind of, yeah, even I raised that question that why has it not been done? Why has it been done for other healthy banks as well? Maithili, you want to answer that question? And also, you know, the point that Mr. Chidambaram made as a parting note, of course, whatever he says, I'm going to take with a pinch of salt because he is a member of the opposition. I mean, of course, very informed views there. But what he says is right. And he says that this should have been, you know, the governor's job alone. Why did the governor have to see to the point where the statement now says the board, while deciding to retain the CRAR, it is not the board's job. It's a very technical issue that the governor should have decided upon.
Well, just I quickly want to talk about the PCA, Supriya, but the very fact that it's called prompt corrective action, and mind you, there have been banks under prompt corrective actions. RBI started this in 2002. The very fact that we still have banks which are not in the best of health after so many years, after 16 years, shows that this action has been neither prompt nor very corrective. As far as the general issue of whether the board should have given this suggestion or whether the governor should have done it, I think we are increasingly moving towards a situation where nothing is rests only on a single man. In fact, the entire idea of a monetary policy committee was purely to ensure that no one man is responsible for taking such major decisions. And here I am with TTR Ramohan when he says it's important that the central bank board comes into its own. In the past, it was largely ornamental. We never heard of a press release after the central board meeting. So, the very fact that the central board meeting is now, there is a press release and there is so much interest in what the central board does, I think that shows that we are moving to a situation where the central board ceases to be just purely ornamental and it does play a more meaningful role. And this is where we take, I think, a leaf out of the book of the Bank of England. The latest act, or the Bank of England in 2016, also puts, in fact, there they call it the Court of Directors. The Court of Directors has a very big oversight role, and I think this is how a good central bank should function, where the central board bank, the board of governors of the central bank, does play a much more important role than it has been doing in the past.
No, fair point. Let me just change track and talk to each one of you about MSMEs. And Swami, I'm going to start this round with you because this release very categorically said that the board also advised that the RBI should consider a scheme for restructuring of stressed standard assets of MSME borrowers with aggregate credit facilities of up to 250 million rupees, 25 crore rupees. My question is that while this is being done, and of course there are very strong proponents of MSMEs now on the board with Mr. S. Gurumurthy leading the charge there, this is a direct fallout of demonetization. The body blow that MSMEs suffered during demonetization, they haven't recovered from there. While this is being done, appreciated, very good, but it is also time for a lot of people to step back and accept that demonetization was a disaster on the account of what happened to the MSMEs, including the RBI.
I have no doubt that demonetization did hit the MSMEs hard, but it was meant to. I mean, it was not an accident. Everybody knows it would have happened. Secondly, if you are out to crack black money, there is no question that the MSME sector was a sector which was grossly avoiding taxation. There's no question about it. So, don't have it both ways. Don't look upon them as only a victim. There was also a problem of paying tax. And when you cracked down, whatever the motivation was, yes, it was going to hit the MSME sector. And in some sense, you also needed to get that sector to become more tax compliant. So the combination of demonetization and GST, I think, is gradually going to do that. It is going to bring the MSME sector more formal. It is going to make it a better taxpayer. In the process, it has been badly hit. Once it's been badly hit, you need to do something about the damage that you have taken. You can argue as to whether demonetization, whether it was a good idea or not, it was certainly bungled in execution. It was a terribly implemented project. So without doubt, you can say that the government is to blame for a very badly devised scheme which caused a lot of unnecessary harm. Having done that, you now need to do something about cleaning up that sector. If that includes a revision of the norms for the lending to that sector, so be it.
Right. But Professor Ramohan, how convinced are you that, this revision of lending to that sector norms is going to be enough? Because, I think Dr. Raghuram Rajan was on the channel a few days back, India's former RBI governor, and he said, world over, the MSMEs want more cash. They want specialized windows, they want more cash. But the reality is that as far as MSMEs are concerned, the ease of doing business has to go up a lot more and not just funding per se. What is your view on this? I mean, do you agree with him? Would you refute him? Because MSMEs as a sector, it has been painted out that they are very cash crunched. They would need special assistance. Now that the RBI is kind of thinking on those lines as well, is that going to be enough though?
Well, you know, the problem with MSMEs has been the lack of transparency in their financials. You know, the financial statements have never been very reliable. And you know, the effect of demonetization is to bring them in, and also GST, is to bring them into the more formal system so that, you know, the financial statements are more reliable than before. And, you know, you have statements which can be more easily rated and evaluated by banks. So to that extent, you know, demonetization and GST are very positive for the SME sector because it makes lending by banks and other agencies much easier. But is the restructuring plan proposed enough? I don't think it's enough, because I think there's much more to be done by way of increasing the flow of credit to SMEs. And the significant omission that I find in the statement, unless I've missed something, is that there is no reference to NBFCs. I thought one of the big issues was trying to improve the liquidity position of NBFCs, because NBFCs are also big lenders to SMEs. And since NBFCs are facing a serious liquidity crunch, I thought that one of the critical points that was coming up for discussion today was some measures to improve the liquidity position in NBFCs, which would have its own impact on SMEs. And from the statement, from what I've heard of the statement, that particular item seems to be missing.
Actually, yeah, now that you say it, and I'm going to go over the release once again, just for the benefit of our viewers, I don't see the word NBFC either, and I thought that was a hotly debated subject. Just that I think Sanjeev Sanyal was with us a short while back, and he said that, you know, the liquidity situation of the NBFCs has significantly improved in the last 10 to 15 years. But yeah, I don't see NBFC either. Anant, are you surprised that the word NBFC, which was supposed to be the big bone of contention, missing? Or do you believe these were all smoke screens, so to say, and the real issue was reserves, and that has been sorted out with the committee?
Yeah, I think the NBFC issue was a source of worry for the government, because they were more concerned about some kind of a tail risk event happening. Probably, I think some tail risk event has been avoided. Liquidity has flown to the needed parties in some form or the other, and therefore they are not viewing this as a matter that requires attention and urgent action right now. So I think that particular event risk that they were worried about probably 2-3 weeks ago is now behind them. That could be the reason why it doesn't figure in the press release. On the SME sector, Supriya, I think a couple of weeks ago or 3, when I was in your panel, I did mention that the key requirement for flow of credit to them is the working capital requirement, and there the onus is on the corporate buyers. And by government asking them to participate in the TREDS system and making it mandatory for large buyers, I think the flow of credit to the MSME sector will improve. And in fact, it probably makes sense to wait for its effects to be felt in the system before we have more directed credit. As far as this current relief is concerned, this is more of a political gesture on the part of the RBI for some of the key constituents of the ruling party or Mr. Gurumurthy's pet concern, because he's on the board of the central bank. So I wouldn't read too much into it, and I'm also happy that there is no specific directions here for flow of credit from the banking system to MSME per se. I think this is not the way to go about it.
Yeah. No, fair point. Just when I wrap up the last round, and Mr. Gopalan, coming to you, the recapitalization of banks is an important issue. You know, the reference has been in some sense made earlier. The government will have to do it at some stage, but the issue is now going to boil down to, is there going to be enough time to do this? So that's one question to you. And because I'm wrapping things up, I also need to ask you, this is the statement from the RBI. Are you going to expect something very, very different from what comes in from North Block tomorrow? At least from an interpretation point of view.
Okay, first thing about first about the recapitalization. Yes, I agree that government accelerate the recapitalization. The bonds which Maithili mentioned ought to come upfront. I don't know why. If that is going to be cash neutral, if that's what the government has led us to believe, I do think so. Then what is the difficulty in taking it forward as quickly as they can? This is something I think it has got to be done with speed and dispatch. This is one. I also think that, I mean, if you think, I mean, I do think that today the scene is that RBI has been pushed by the government on two fronts. One, giving a board deciding on a regulation, and two, making the board, I mean, making the RBI to look at some of the issues which leading into capital, the reserves, I mean, taking away later at some point in time, and those kind of issues. Now, tomorrow, if the government comes back with a statement regarding recapitalization of banks, regarding what they propose to do for MSMEs, trying to commit themselves to action with an action plan, then I would think that there is a balance in today's discussions. I am eagerly awaiting tomorrow's probably news coming out of the Finance Ministry as well as MSME Ministry as to what they intend doing to compensate or to be a complement the RBI's decisions today.
Maithili, quickly, you know, what is it that the RBI and the board discussed today and the government representatives over 9 long hours, keeping all of us engaged, including you, and my sincerest apologies for keeping you engaged on one camera all day. What is it that they discussed eventually, which they could not in a matter of a few hours? I mean, 9-hour long meeting to discuss forming a committee and referring some issues to an advisory panel. It's kind of amusing and also a little puzzling.
Well, yes, it does defy comprehension, but the good thing is really that they've, agreed to continue to talk and set up committees. So that really is the progress, that nothing has really come to they came to the brink and then both sides stepped back, and that is very good, not only for the two institutions, the government as well as the Reserve Bank, but also for the country. So I think for now, good beginning. As Mr. Gopalan said, let's see what the government says tomorrow, because the ball is in their court as far as recap bonds is concerned, and that could really change a lot of things. It could solve the situations in many, many ways.
Swami, to you then, Mr. Chidambaram said none of these issues were issues that couldn't have been discussed over an hour-long lunch between the Finance Minister and Urjit Patel. I don't know if Gujarati and Punjabi men can share their cuisines and get talking. Perhaps Mr. Chidambaram could do that with curd rice and ragu. But on a more serious note, why could these issues not be solved at the highest level? Why did they have to go down to the level of a high standoff, bitter battle of words, and eventually this is the outcome? Like you started off by saying, this was a storm in a teacup of sorts.
I said, from my point of view, if there are people who want to talk at the board level and they carry on talking for 9 hours, there's nothing wrong with it. Most of the time, directors at a board meeting are asleep. If instead of being asleep, they are actually awake, if they have studied their subject, if they have something to say and they take some time to say it, so be it. The topics are serious enough to spend more than 1 hour over lunch, believe me. The idea that this is a non-technical thing just to be done over lunch, no. Some of these issues are highly technical. It is possible to have extremely complex views on how to move forward. So, Mr. Chidambaram is a politician. He has to, by and large, show that, the government was doing something terrible and has backed away and hurrah. I think that's an exaggeration of the state of affairs. There are serious issues. And I think it requires an expert committee because the issues are technical. So it is not something that could just have been dismissed at a meeting of the RBI governor and the finance minister when it had got to the point where, there are some serious things to be done. And I'm glad that they've appointed a technical committee, and let's hope that it does its job.
Fair point. Very quickly, and I'm running out of time here. Two quick last words to, we've started this wrap round with Mr. Gopalan. To you then, Professor Ram Mohan. Is your big takeaway going to be, Professor T.T.R. Ram Mohan, that both sides, despite the bitter battle of a public showdown, could exercise restraint at the end of the day? And that perhaps tension has been diffused. Is that your big takeaway, that restraint could be exercised?
Well, yes, I mean, that certainly appears to be the case. But as I mentioned at the very outset, I think there is a shift in the paradigm, and the role of the board has come to be acknowledged in a very significant way. By the way, one is not sure that the outcomes mentioned in the note that was released covers, cover all the issues that were discussed. It could well be that there was some discussion on the role and powers of the board and the accountability of RBI management to the board, and those things may not have found mention in the press release that was issued. But I think Mr. Gurumurthy really did frame the question in very sharp terms when he said that, we need to be clear what the independence of RBI means. Is it the independence of the RBI board, or is it the independence of the RBI management from the board? And I think, we certainly still need clarity on that particular issue one way or another.
Fair point. Fair point. A quick last word to you, Anant, and very quickly then. There is one way to look at it, which is that, restraint has been exercised and reaching to the point of brink, both sides have withdrawn. The other way to look at it is, it's good news. At least the two sides are now willing to talk to each other. Imagine Viral Acharya, who said wrath of markets, and then, Mr. Garg, who tweeted saying wrath of markets because markets went up one day. We're all sitting across the table and talking. So there are two ways to look at this. They've exercised restraint, or at least both of those sides are off their high horses, and they realize in the management of both fiscal and monetary policies, the two sides will have to talk. Being on high horses is not going to help either the RBI or the government, and that realization perhaps has doomed some sense into both their heads.
No, I think that's clearly a good conclusion, and I would agree with that. But I would also point out that this entire controversy has also done something good. I think it has opened the possibility of RBI introspecting a lot more, because in general the suited booted class has tended to side with the RBI against the so-called pan-chewing politician. And I think today's interview by Indra Rajaraman in Mint, for example, and many other columns have highlighted the fact that RBI also has a lot of explanation to do, and she clearly points out that some of these calculations of reserves, etc., have to be made transparent. You cannot assume that the board is ignorant and therefore we will simply have to give you the number and you take it or leave it. You have no business to question us. Right. I think this controversy might be considered unseemly, but I think it had served a useful purpose on the RBI too.
No, there is, yes. No, there is no denying that this controversy has done one thing. And that one thing is that it has opened the RBI to far more public discourse, far more public scrutiny, and far more public debate that the central bank was not accustomed to. And I think on that point, the RBI will have to be far more accountable than perhaps it has been to the people of the country at large. I mean, so far the politician has been accountable and the central bank has been a bit of a technocrat and an institution. I think that is what this controversy and this public showdown has done. But on that note, completely out of time on this edition of the India Development Debate, I couldn't have asked or wished for a better panel than all of you put together. My apologies for keeping some of you up late at night and for dialing some of you in early, but thank you very, very much. Beginning, of course, from our consulting editor Maithili Busnurmat and Swaminathan Iyer, to, of course, Professor T.T.R. Ram Mohan, Anand Nageshwar, and, of course, Mr. R. Gopalan. Thank you very much for being with us. Appreciate you joining us in this edition of the India Development Debate. And like I said, the parting note is that the volatile face-off has been averted. No resignations on the table, but plenty more of scrutiny. And it looks like implicitly the role and influence of the board is beginning to be acknowledged.